Hello everyone, welcome to the market opening bell for Thursday, February 12th, your 10-minute guide to the stock market. Hong Kong stocks extended the gains for a third consecutive day. The Hang Seng Index opened 63 points higher and saw its gains widen, reaching an intraday high of 142 points at 27,325 before closing up 83 points or 0.3% at 27,266. The China Enterprises Index rose 25 points or 0.3% to close at 9,268, while the Hang Seng Tech Index climbed 48 points or 0.9% to finish at 5,499. Total market turnover for the day amounted to $217.2 billion. Southbound funds recorded total trading of $90.782 billion, with Southbound funds showing net inflows of $4.816 billion. Among the net inflows, Tencent saw $736 million, Zijin Mining International saw $191 million, and Mart $144 million. On the net outflow side, Alibaba saw $521 million, SMIC $391 million, China Life $246 million, and YOFC $160 million. Technically speaking, with the Lunar New Year approaching, trading volume has shrunk, and the Hang Seng Index has formed 3 consecutive doji candles over the past few days, signaling a strong wait-and-see sentiment in the market. Last month's mainland China's CPI data came in below expectations, while PPI performed better than anticipated. The 3 major A-share indexes showed mixed performance, with the Shanghai Composite Index rising 3 points or 0.09% to close at 4,131. The Shenzhen Component Index fell 49 points or 0.4% to 14,160, and the Chinex Index dropped 35 points or 1% to 3,284. Combined turnover on the Shanghai and Shenzhen exchanges totaled 1,982.6 billion yuan. The central parity rate of the renminbi against the US dollar was set 20 pips higher at 6.9438 per US dollar, marking the highest level since May 11th, 2023. According to data released by the National Bureau of Statistics, China's National Consumer Price Index (CPI) rose 0.2% year-on-year in January, below the market expectation of a 0.4% increase, while it also rose 0.2% month-on-month. The National Producer Price Index for industrial products fell 1.4% year-on-year, slightly better than the expected 1.5% decline, with a drop narrowing by 0.5 percentage points from the previous months. Month-on-month, it rose 0.4%, an expansion of 0.2 percentage points from the prior months. Industrial producer purchase prices declined 1.4% year-on-year, narrowing the drop by 0.7 percentage points from the previous months, and rose 0.5% month-on-month, up 0.1 percentage points from the prior months. Dong Li-Juan, Chief Statistician of the Urban Department at the National Bureau of Statistics, explained the CPI and PPI data by noting that resident consumption demand continues to recover steadily, and the mild upward trend in core CPI remains unchanged. In January, core CPI continued to rise month-on-month. Excluding food and energy prices, core CPI increased 0.3% month-on-month, the highest in nearly 6 months, and rose 0.8% year-on-year. The year-on-year increase moderated somewhat due to the Lunar New Year calendar effect. Last January coincided with the Lunar New Year period, when food and certain service prices rose more significantly, resulting in a higher base for comparison and contributing to the larger year-on-year decline this month. A relevant official from the Ministry of Commerce stated at a State Council Information Office press conference that for this year's Lunar New Year holiday, the Ministry of Commerce together with 9 other departments, has planned the Happy Shopping New Year special campaign, offering consumers genuine New Year gift packages in the form of real cash benefits. Localities have already allocated 20.5 billion yuan in funds to directly benefit the public through the issuance of consumption vouchers, subsidies and red packets during the 9-day holiday period. Automotive stocks performed well. Reports indicate that the European Commission has approved an application from Volkswagen's Cupra brand, allowing its Tavascan SUV coupe produced in China to be exempt from import tariffs in exchange for adopting minimum price and quota mechanisms. This marks the first time the EU has accepted such commitments. In 2024, the EU imposed additional tariffs on Chinese-made electric vehicles, requiring the fully electric Tavascan to face an extra 20.7% tariff on top of the existing 10%. In response, the China Association of Automobile Manufacturers stated that Chinese EV makers are considering submitting their own price commitment proposals and hope the EU will treat Chinese companies fairly. The latest data from the association shows that vehicle production and sales last month reached 2.45 million and 2.346 million units respectively, with production edging up 0.01% year-on-year and sales declining 3.2%. New energy vehicle production and sales completed 1.041 million and 945,000 units, rising 2.5% and 0.1% year-on-year respectively. Vehicle exports continue to grow, with new energy vehicle exports doubling year-on-year to 302,000 units. NetEase released its fourth quarter and full year 2025 results, showing a pattern of slight revenue growth but profits missing expectations, reflecting slower growth in its core gaming business and rising promotion costs. Quarterly net revenue reached 27.55 billion yuan, up 3% year-on-year, but below market expectations of around 28.4 billion to 28.7 billion yuan. Net profit attributable to shareholders fell sharply by 28.8% to 6.24 billion yuan, while adjusted net profit decreased 26.9% to 7.07 billion yuan, well short of the market forecast of 9 billion yuan. The gross margin for games and related value-added services dropped from 69.5% in the same quarter last year to 66.7%, mainly due to a higher proportion of lower margin licensed game revenue. Operating expenses in the fourth quarter reached 9.4 billion yuan, up 10.9% year-on-year, primarily driven by intensive marketing for new games, which directly eroded profit margins. NetEase announced a quarterly dividend of $0.232 per share and extended its $5 billion share repurchase program until 2029, demonstrating confidence in its long-term cash flow. Overall, NetEase is in a peak period of transitioning between old and new games while ramping up market investments. Although short-term profits have disappointed due to higher promotion expenses, its strong cash reserves and ongoing buyback policy provide some support for the share price. NetEase Cloud Music delivered relatively stable performance, with quarterly revenue of 2 billion yuan, up 4.7% year-on-year. Full-year revenue was around 7.8 billion yuan, down 2.4% from 8 billion in 2024, but net profit surged 76% year-on-year to 2.75 billion yuan, reflecting strong cost control and growth in subscription members, indicating a shift from high-speed expansion to high-quality profitability. Gross margin improved from 26.7% in 2023 to 33.7% in 2024 and further to 35.7% in 2025, mainly thanks to precise control over content copyright costs and scale effects. Youdao reported quarterly revenue of 1.6 billion yuan, up 16.8% year-on-year, benefiting from the recovery in learning services and smart hardware. U.S. January non-farm payrolls far exceeded expectations, with the unemployment rate unexpectedly declining, leading to mixed but slightly softer performance in U.S. stocks. The fear gauge fixed index fell 0.14 points or 0.8% to 17.65. The Dow Jones, which had hit new highs for 3 straight days, traded choppily, reaching an intraday high of 50,499 before closing down 66 points or 0.1% at 50,121. The Nasdaq fell 36 points or 0.2% to 23,066, while the S&P 500 closed nearly flat at 6,941. The Nasdaq China Golden Dragon Index, reflecting Chinese concept stocks, dropped 51 points or 0.7% to 7,834. Among the Magnificent Seven, Microsoft and Alphabet both fell over 2%. Nvidia rose 0.8%, Tesla and Apple gained 0.7%, and Meta declined 0.3%. Pershing Square, led by Ackman, disclosed a stake in Meta and stated that its value is undervalued. Meta announced that its Threads platform has launched an AI feature called Dear Algo, allowing users to personalize their content recommendation algorithms. Additionally, Ray-Ban parent EssilorLuxottica reported the sales of AI glasses developed in partnership with Meta more than double year-on-year last year, with over 7 million units sold. Combined AI glasses sales in 2023 and 2024 total 2 million units. Meta has confirmed ongoing collaboration with Ray-Ban and extended the long-term partnership agreement in 2024, with cooperation set to continue into the next decade. Kraft Heinz announced the suspension of its spin-off plan, with the stock price first falling but then stabilizing to close up 0.4%. The company was formed through a merger orchestrated by Warren Buffett a decade ago. Pharmaceutical giant Moderna had its application for the experimental mRNA 1010 flu vaccine rejected for review by the US FDA, causing the stock to drop as much as 10% before narrowing the decline to 3.5% for the day. Hasbro CEO Chris Cox stated that the company will focus more on video games and the collectible card game Magic: The Gathering to reduce tariff risks associated with traditional toys. Cox added that the company is developing around 10 video games, and in the future up to 80% of Hasbro business and 95% of its investments will concentrate on collectibles and gaming related areas. McDonald's reported that same-store sales growth across regions reached 5.7% in the fourth quarter, ending December 31st last year, exceeding analysts' expectations of 3.9%. Total revenue grew 10% to $7.01 billion, while profit increased 7% to $2.16 billion. Earnings per share excluding one-time items came in at $3.12, above analyst forecasts. The stock rose 2% in after-hours trading. U.S. January non-farm payrolls rose by 130,000, far surpassing the downwardly revised 48,000 increase in December and significantly beating market expectations of 70,000. Meanwhile, the total non-farm payroll increase for 2025 was revised down from 584,000 to 181,000, implying an average monthly gain of just 15,000, much lower than the previously reported 49,000. The U.S. January unemployment rate fell from 4.4% in December to 4.3%, slightly below the expected 4.4%. The labor force participation rate rose 0.1 percentage points to 62.5%. Average hourly earnings for private non-farm employees increased 15 cents or 0.4% month-on-month to $37.17, slightly above the expected 0.3% rise after December's increase was revised down to 0.1%. Over the past 12 months, average hourly earnings rose 3.7%, in line with the revised December data and above the market forecast of 3.6%. The strong U.S. jobs report suggests the Federal Reserve may keep interest rates unchanged for some time, leading to a narrower but still positive gain in gold prices on Wednesday. Spot gold rose $46 or 0.9% to $5,071 per ounce. April gold futures climbed $65 or 1.3% to $5,097 per ounce. March silver futures rose 3.9% to $83.6 per ounce. The Silver Institute indicated that global silver demand is expected to remain stable this year, with increased retail investment demand offsetting most losses in industrial, jewelry, and silverware demand. Commissioned preliminary estimates from consultant Metals Focus suggest a current silver shortfall of 67 million ounces, marking the sixth consecutive year of structural supply shortages in the silver market. The association noted that due to silver conservation efforts and the photovoltaic industry's complete abandonment of silver use, industrial silver processing volume is projected to decline 2% this year to 650 million ounces, the lowest in 4 years. At record high silver prices, demand in India and other major markets will be hit, with jewelry demand expected to fall for a second straight year by 9% to 178 million ounces, the lowest since 2020. However, global total silver supply is forecast to rise 1.5% to 1.05 billion ounces, reaching a 10-year high. Our stock pick today is Henlius Biotech, stock code 2696. Henlius Biotech is an international innovative biopharmaceutical company focused on developing monoclonal antibody drugs, primarily targeting oncology and autoimmune diseases. The company has successfully launched 6 products covering 25 indications, which have been approved for marketing in China, the United States, Europe, Canada, Australia, Indonesia, Mexico, Bolivia, and other countries and regions. Among these, 4 products have been approved in various overseas markets, covering nearly 60 countries and regions, and benefiting more than 850,000 patients worldwide. Han Si Chuang has been approved in over 30 countries and regions. It has received orphan drug designation from regulatory authorities in the US, EU, Switzerland, and South Korea. It is the company's second product approved in the EU and the first anti-PD-1 monoclonal antibody approved in the EU for small cell lung cancer indications. Han Qu-you's internationalization continues to advance steadily. Marketing authorization applications for different specifications have been approved in countries including Mexico. It has now been approved in a cumulative total of over 50 countries and regions, including the US, Europe, Canada, and Australia. Han Bei Tai is approved in Mexico and the Dominican Republic. The company plans to work closely with partners such as Abbott, Europharma, Boston Oncology, and LLC and Kietz Pharma to continue advancing the international market entry of Hanikang, Han Dayuan, and Han Bei Tai. The group's biopharmaceutical industrialization bases fully support the global supply of approved products. The Xuhui base has achieved routine global market supply, currently covering China, Europe, Latin America, and Southeast Asia, India, and other markets. The Songjiang base Phase 1 in Songjiang District, Shanghai has obtained GMP certification from China, the US and the EU. To meet long-term commercial capacity needs, the Songjiang base total planned land area of 200 mu started construction in 2019. Its first and second phases have a combined design capacity of 36,000 liters and completed overall completion acceptance in August 2025. The company currently has an R&D pipeline of approximately 50 molecules and more than 10 R&D platforms, covering a rich variety of drug modalities such as monoclonal antibodies, specific antibodies, antibody drug conjugates, ADCs, fusion proteins, and small molecule drugs. Its self-built clinical operation teams in China, the US, Australia, and other locations are advancing clinical studies in an orderly manner across nearly 30 countries and regions. Henlius is also actively expanding its pipeline through in-licensing. In June 2025, it entered into a licensing agreement with FBD Biologics Limited to obtain exclusive development, production, and commercialization rights for its fusion protein in mainland China, Hong Kong, Macau, and specific Southeast Asian countries. In August 2025, it reached a strategic cooperation with Gene Quantum Healthcare, Suzhou, to obtain development and exclusive commercialization rights to be innovative for the innovative HER2 targeted ADC in China and specific overseas countries and regions. Suggested buy price $70, target price $79, stop loss level $66. I do not hold the above stock.